Hello and welcome to The Bottom Line on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. Germany made history today with a pivotal vote in Parliament on loosening fiscal rules that have been obstructing the country's growth and will now enable unprecedented increases in German defence and infrastructure spending. Before we find out more about today's events, let's see Jan Kennedy's feature.
Germany's soon-to-be chancellor has reasons to smile after his proposed groundbreaking borrowing plan won a majority in a parliamentary vote. The plan will allocate €500 billion for infrastructure and climate investment and make defence expenditures exempt from the country's strict debt brake rule. A step deemed crucial after the US said it would no longer ensure EU security.
We
need better conditions for work to increase the work, more willingness to perform in Germany. We need better conditions for investment so that companies are willing to invest in Germany again. And for this, we need a reduction in bureaucracy and tax relief. We need a more convincing energy policy.
The plan marks a major shift after 2 decades of fiscal restraint, during which Germany's infrastructure deteriorated and its technological advancement lagged behind other EU countries.
When you look at the German economy, they have done too little. Digitalization, conventional infrastructure. We've all been running behind the rest of the world, and this is one of the reasons why Germany has been falling on international competitiveness rankings.
And the decline over the past decade is severe. From the 6th position in 2014, last year Germany ranked 24th out of 67 in the IMD World Competitiveness Yearbook. The rankings are based on economic performance, government and business efficiency, and infrastructure. The country placed 20th in terms of infrastructure, 32nd in government efficiency, and 35th in business efficiency. And in some subcategories, Germany dropped by as many as 13 places compared to the year before. To make matters worse, the IFO Institute for Economic Research has slashed its economic growth forecast for Germany in its latest report released on Monday. The IFO predicts that the German economy will expand by a meagre 0.2% in 2025, down 0.2 percentage points from the winter forecast. But IFO President Clemens Fuest warns that a potential US-EU tariff war could further hinder Germany's recovery.
For a turnaround to be achieved, the global political situation would have to change. If Trump actually starts a tariff war with Europe, the German economy will not be able to recover.
Germany's automotive sector would be among the most affected.
We have now created a very conservative provision which amounts to roughly €1 billion, a very conservative approach. However, we also believe that not all tariffs which are currently in place will still be around by the end of the year.
However, Fuest stressed that Germany must also address its domestic issues.
We need to become stronger. We need to provide for our own security. This, dear colleagues, is our responsibility. This amendment to the basic law today serves exactly this purpose. It is an important and clear sign that we will do everything to maintain peace in Europe.
Despite the global challenges, analysts believe the investment plan will provide the German economy with a much-needed boost.
It would clearly help lifting off the German economy, whether it's 0.2% or 0.5%. But I fully agree that we will see in the second half of this year already some positive implications, and more would then unfold in 2026 and 2027.
The resurgence of Germany in the EU would provide a critical lifeline to other members of the 27-nation bloc, which are heavily dependent on the EU's biggest economy, Poland being one of them.
That's also positive news for the Polish economy because, as probably you know, it's like 40% of their industrial production which we export goes to Germany.
One crucial question remains. How effectively will these funds be utilized to strengthen the economies of both the European Union and Poland?
So the measures passed today in the Bundestag still have to be approved by lawmakers in the Bundesrat, the upper chamber of the German parliament, on Friday. It's rather unlikely for the vote to fail there, so we can already start projecting on how Berlin's additional defence and infrastructure spending will affect our region. And for that, we are now joined by Piotr Arak, Chief Economist at VeloBank, to tell us more. Hello, and thank you for joining us today.
Hi, pleasure to be here.
So I say we because this debt brake will impact the European Union, and by impacting the largest economy in the EU, it will impact Poland. So I'd like to ask you to tell us in what ways and to what extent.
Well, of course, it's going to impact everybody, as did the debt brake itself in 2009, when the German lawmakers passed it to be an element of their Verfassung, the constitution of the German Federation, the German economy, the German government. So this skewed and downgraded any investments conducted by the public sector in the last 15 years. And currently, Germany is the lowest spending on infrastructure country within the G7 economies. So this was one of the elements criticized basically by everybody. German economists, outside Germany, French, Polish experts, even the European Commission said that Germany needs to spend more on infrastructure. And currently, Friedrich Merz has done something that the previous government was not able to do in the last years. He basically changed the paradigm. So with the younger generation of German economists, the way of thinking about fiscal spending, fiscal expenditures changed a lot. And the Schwarze Null, so the German debt brake, is not as important as it used to be. Mm-hmm. Although it's still there in place, because we need to remember that this only takes into account any new infrastructure, cybersecurity, or civil security, civil defense measures that are going to be excluded from the deficit brake on a yearly basis. And the infrastructure overall is then going to be also analyzed and probably controlled by the courts in Karlsruhe, which also sometimes tends to make additional interpretations of the regulation and the constitution. So it might be so that in some years of time, even the German government might have problems with this current bill. But it's groundbreaking. So this for sure is going to impact the Polish construction, defense, industry sector. Probably the European economy could be having an increased growth rate of 1.5% by 2029, just with this additional expenditures by the German economy. And 1.5 would be the German economy, and the European economy would just be a 0.5% increase. So the effect would be quite big and substantial. And of course, this scheme, which the Germans are, how they are changing their own constitution, is going to be a blueprint for the European Commission on the discussions and changes of the fiscal rules within this year, also signaled by Ursula von der Leyen.
Sure. And now zooming in a little bit more on Poland. Poland's got some really good, positive growth forecasts. And what's very encouraging is this bull run that we've been seeing on the Warsaw Stock Exchange in recent months. It only emphasizes that our region is a good place to invest. And I'm just wondering whether with this vote that's gone through, is this going to make even more good news for our region and Poland in particular? Yeah,
we saw increases in the valuations in the trade of construction companies on the Polish Warsaw Stock Exchange. This is strictly connected with whatever's happening in the Bundestag, because all those companies are going to be part of the supply chain for the German economy. The German economy is not going to be able to use its own resources only to build additional infrastructure, to increase the capacity of the military. This is how Rheinmetall and other defense manufacturers on the Frankfurt Stock Exchange are increasing in valuation. But this means a lot of supply conducted within the Central European cluster, which is strictly connected with the German economy. So, of course, we now might be expecting a 4% even increase in the forecast of the Polish economy, probably around 4%. I don't have yet the numbers, but probably with some substantially good news coming from the Polish economy at the beginning of the year, and also with this additional expenditure package from the German economy, German government. we would expect that the growth pace would be substantially higher in this year and probably next year. So if we have projections of 3.2, 3.5% growth rates 2026, probably they're going to be a bit higher, more to the 4% side.
Well, PKO says that Merz's plan could actually push Poland to break that 4% forecast. The government has put 3.9% in its budget. Law, you say you don't have the figures. It might be a bit early to say anything, but just knowing what you know, your gut feeling, perhaps, do you think we could break 4%?
Yeah, typically.
Realistic?
Yeah, this is realistically something that could happen. So this year, so we need to see yet the numbers for the first quarter.
Yeah.
But I would be very optimistic. Friedrich Merz is not even the chancellor yet, and he changed the constitution.
Yes.
That's very substantial, and making the Greens and the Social Democrats fall in line to change something that's substantial, which also managed to destroy the previous coalition.
Yes.
Do remember that the debt break and the fiscal issues were the reason why the Liberals basically destroyed the previous coalition, and we had these preliminary elections in Germany.
Knowing the trade relationship between Germany and Poland, do you think that Polish exports could go up in the second half of this year, perhaps also as a way to deal with the Trump tariffs that are definitely going to be affecting Europe?
Well, this is difficult to say yet. Still, we're in a period of time where interest rates are a bit high. This is why the Federal Reserve probably is not going to decrease the interest rates in the United States as fast as we expected, because of this uncertainty that has been created by the Trump administration. Yet the German economy has a lot of issues. It lacks optimism, I would say, in all the indicators, even showcast here before the show. You could see that a lot of the managers, logistics directors, and everybody in the business sector, in the industrial sector, they tend to see a gloomy picture of the German economy. The German manufacturing, auto manufacturing business is sacking more than 40,000 employees. It's being said that they could be building munitions and, military vehicles, still going back probably to their roots. But it's something yet to be seen. This is not something that's going to change within a quarter.
Sure.
Probably end of this year, we're going to see substantial increases, not only of the soft indicators, the PMIs, that probably going to showcase what the people in the business sector expect is going to happen, but then in the real industrial sector, so increase revenue, increase margins, and then actually an increase in the GDP. So the version of the growth in Germany being 0.4% this year, and next year being more than 1%. This is probably something more probable still than it is that we're going to have like an extremely fast-growing German economy. There's a lot of uncertainty. The Trump administration is not going to make it easy for the Germans to have a high growth pace.
Yeah, I suppose everyone's feeling a bit antsy about everything. Looking into the future, could you tell us about the interplay between the benefit of the extra spending, the extra spending that it will provide, and the hits that the German economy will take from the Trump tariffs and other factors?
This is yet to be seen, because we actually don't know. So with Trump and his administration, it's a lot of talk, a lot of PR, and then actually there's a lot less happening in real life. This is something we got to know in his first term in office. So there was a lot of PR, a lot of media attention to whatever he said or whatever.
There's a gap.
Yeah, and then there's this gap in real-time policy making, and European Union was not affected yet that much with the tariffs implemented by the Trump administration. Yet, for example, Poland is not an exporter of aluminium going to the U.S. market. Germany more so. But still, with the exports still being in a very bad position, it's not that Trump tariffs are basically so detrimental to the German economy. It's what could happen next is the big question. So if Trump imposes tariffs on automotive sector, really, and then they start to be competitive on the American market, we're going to see a downgrade in any investment of the German car manufacturers. We're not going to still see the defense expenditures happening in the industrial sector in Germany. This is the moment where probably the German economy is going to feel worse than it is right now, before it's going to be better with the additional expenditures and additional debt incurred by the German state.
So do you think things will get worse before they get better if
Trump,
this scenario kicks in?
if Trump is going to impose tariffs, yes, because like on day one, the prices of some cars on the U.S. market are going to be too big for too high for a lot of the customers in the United States. We know what happened to the EV market last year. So China did not impose any sanctions on the European market. It just stopped buying.
Yeah.
Customers just stopped buying electric vehicles coming from the European Union. And this is a boycott, but happening by the customer, not by the state.
Do you think that the defense and infrastructure spending might reposition Germany to its former economic glory if things pan out the way that they should with this fund?
Well, I think, first off, with this change of the constitution, the upcoming chancellor is going to have a similar role as Angela Merkel had in the previous years within the European Union. So he's going to be one of the leaders of the European Union on a political level, and because of that, had a lot of more influence on the actual legislation from Brussels. And with that on state aid and regulations concerning state assistance, which probably is going to be loosened a lot in order for the German government to aid their automotive sector and other industrial bases of their economy. So it could make Germany once more a healthier economy. I don't know if it's going to make everything with the German economy okay. The structural issues of the cost of energy are still there. The competitiveness of the production in comparison to China of services which are based in the United States is still there. So it's not that with additional money we can basically change everything.
Yeah, it's not just about money, is it? I just wanted to listen to the soundbite before I ask my final question as we wrap up.
Okay.
We see that this is like kids walking into a candy store and they take everything to the left and to the right, everything they always have been wishing for. But then at the end of the store, you get to the cash register and you also all realize, hey, you have to pay for it. And I think this is the big risk right now, that we have huge fiscal stimulus, but that in the end, it still ends up rather as government consumption and not so much as forward-looking investment.
So that's your friend, Carsten Brzeski, from ING, head of macro. What are your comments to that? Because I was asking him about the fact that there is always a price to pay.
Yeah, of course, the first price the German government is going to pay, and for that the German citizen, is increase in debt. And this means that in some time there are going to be additional bonds that are going to be with a bit higher interest rates presented to the market, and with some time the German government is going to have to repay this debt. So it's not that we have a magic wand that's basically creating a pile of money that we're going to get. So with debt, there's always the issue of the repayment at some point. And so this is the one detrimental issue. And the second one is if defense expenditures are actually increasing the GDP of an economy. So the economic research is not very optimistic about that. So just €0.50 actually increases the value added within the economy, because a lot of defense expenditures is waste in economic sense. So it does not create additional revenue in other sectors.
Okay, so as much as there is stuff to be happy about, there are also there's going to be a price to pay for all this.
Yeah.
Okay. Piotr, thanks so much for joining us. It was great to talk to you.
Pleasure being here. Thanks.
And we were joined by VeloBank's Chief Economist, Piotr Arak. Thanks for being with us today. I was your host, Marie Cato. Join us every weekday afternoon for The Bottom Line at 5:10 CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.